All right, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it this week. So, a lot going on here. So, middle of the week, we really started to roll over, and you can see kind of got rid of that broadening pattern that we've had on for the last couple of weeks. So, this channel here, kind of don't really care about this. That's lower trend line right now. What I'm watching now is this upsloping trend line, this rising wedge, and we were in danger of violating that on Wednesday. We actually did violate it and close below it. And then, of course, everybody knows by now, Nvidia earnings, really blowout quarter. They guided up, I think, 53%. And I mean, their valuation now is insane. I think we're trading at 29 or 30 times sales. But either way, the AI craze is still going here. You got stocks like SMCI, just an amazing run here. Even AMD's getting a sympathy bid off of it. So, Palantir as well had a huge run, last couple of weeks, going from the 7 handle to 13. Nvidia really doing a lot, and now, strangely enough, or perhaps not strangely, they are doing a share offering. It sounds like so they were doing a buyback. They started a buyback at 160, and now they're doing. Looks like they're going to be, doing some dilution here, which I guess makes sense for them. But this is another thing too about the second half of the year. Buybacks will be coming off a cliff here, so. I guess we can enjoy them while they last, and the AI hype train will continue things going here. But bottom line, Nvidia really saved the mark here. Now the Nasdaq, we've been talking about this for really months, right? We've been looking for some type of a blow-off move, and we've wanted that in the S&P as well. We haven't really gotten it in the S&P yet. If we look at our targets here, it's still the same, right? So we still have this gap here at 422. And above that, I would say about 425 is you're gonna have some pretty good resistance at that level. And then of course there's this rising wedge that could break down early. Now, of course, the debt ceiling, that's the big story right now. It looks like Biden and McCarthy have an agreement here. I'm doing this video Monday, so it is Memorial Day here. It has not been voted on yet. Now, that's kind of a kicker here. It looks like some Republicans are against it. I mean, we can't predict what's going to go on here, but markets right now, if I'm looking at the futures here, they did gap up and then kind of sold off a little bit. But, if that vote falls through, we could see some volatility. Big picture, though, this is what really matters here, and this is something everybody needs to understand. I'm going to show you a chart here. It's really down to the Treasury general account. Once the debt ceiling is done, and it's ironic that we're rallying up into it, perhaps not so, but we're rallying up into the debt ceiling agreement. Likely, once that gets done, you'll have a pop. After that happens, after that is over with, the Treasury needs to refill to the tune of at least 500 to probably closer to 700 billion. The last time they did that, the last time they had to rapidly refill, rather, was in December of 2021. We're looking at a chart of the inverted NASDAQ and S&P, and you can see it's a positive correlation with the Treasury general account. It's not a coincidence that if we go back to really, December, January was when Yellen started kind of emptying that out. And it's not a coincidence. We've seen a tailwind in stocks since then. It's kind of offset the QT that the Fed has been doing to an extent. If and when this happens, you're going to have double QT. So that is a headwind. So there's going to be some liquidity being pulled out of the system. So I think you get some type of a pop up here. Markets are vulnerable to a correction. Again, we've been looking for that for a while here. But that's just the nature of it. And, we look at the triple Qs. Just an amazing run here. And again, we've talked about this so many times. It's really, 5-6 stocks here. And, some of the AI stocks are catching up here, but it's really just 5-6 stocks. Take a look at the Dow. That's been making lower highs since December. We look at the Russell 2000. That's been making lower highs since February. So, again, it's not like, we say this every week here. Breadth has been horrible. One thing that is interesting to me, though, is that we're basically right into, on the triple Qs, we are pretty much right into a 618 right now from the all-time high. And if you take that right there, you can see, there's a little bit of room for upside. If we can actually look at the NQ, and it basically hit that. So there's the Nasdaq futures, and obviously that gapped up on that kind of debt ceiling comments. You just pierced it a little bit there, but we are into that 618. So there's a lot of resistance here, especially with kind of this sell-off here from, March, April of last year. If we look on a weekly chart, and I'm going to go back to the Qs here. Well, you can see we sold off in pretty heavy volume in this area, and there's a lot of chop. So that should be resistance. Either way, though, Nasdaq has held up really well. And another thing too, I know a lot of people are talking about the bear is over, but if I did this on my channel the other day, but if you roll the tape back on the Qs, we hit the 618 before in both 2008. Right there, there's your 618 hit, and in 2000 as well. So we go right to the high there, and you can see you kind of double topped it right there. So this is not uncommon, a 618 retrace. They call it the golden ratio for a reason. So we are into some resistance here. So interesting levels, but I'm interested to see how this market trades post debt ceiling deal. That's going to be the real kicker to me, because if Yellen refills that account very quickly, it's going to suck a lot of liquidity out of the system that was pumped into it over the last 6 months. So we'll see how stocks respond. And to that, either way, that's the level I'm watching. 618 there on the Qs, big level this week. Obviously, the debt ceiling, again, if they can't get a vote done, we might gap down. We might, there might be some volatility there. But I think really, to me, what comes down to is when it's done, that's going to be we want to see the market's reaction post that. Do we get an initial pop and then do we sell off, something of that nature here? But again, the more we pump up into that debt ceiling announcement, I think the more likelihood there is for a downside. Speaking of, if we look at I don't show this a lot, but if we look at the VIX, but not the regular VIX, the Nasdaq VIX, VXN, you can see that on the 17th we bottomed, and we've been holding up even as the triple Qs have continued higher. There's the 17th, and we've continued higher there, obviously, with that big move Thursday, Friday. So it does tell you that there is some protection being bought here. Either way, those are the levels we're watching here. Spiders, again, same thing, 422 gap fill, rising wedge, upsloping trend line, and then 425 is kind of your bigger level there. As far as the Russell 2000, again, had a nice pop on Friday, still a weekly chart, bearish inside bar there, inside of a bigger kind of bear channel. So again, breadth still very terrible, especially in small caps. Dow, DIA here, that managed to save its 200-day moving average there, but it did close back below 331.45, so a little bit on the softer side. Semiconductors obviously getting a huge move here, new 52-week highs, really, back off the back of Nvidia, AMD, of course. I believe Applied Materials as well had a big pop this week. Yeah, so up 4.28% on Friday there, and up big on Thursday. So semiconductors new 52-week highs, and this is into a lot of resistance as well. This is the area that we came up here and then we started to flag, kind of bull flag, and it failed. So there should be buyers trapped in this area. Maybe it wants to test 151. That's your inside bar high from early January. But either way, semiconductors big move here, and obviously that was really the saving grace, because we were on the precipice of a little rollover there in the middle of the week, and obviously Nvidia to the rescue. IGV into a pretty good level here, 100-week moving average, and then that pivot low from January 24th, a little chop zone there, and then we started to roll over there, and we never quite got there in August, but now we're there now with the 100 MA, so pretty pivotal area there for the IGV as well. Dow Transports, they were up just 10 basis points on Friday with a pretty strong rally in the market. And again, another sector here that topped out in February and has not made new highs. So, according to Dow theory, this is a major divergence here. Another major divergence here. Before I forget here, as we look at TLT, actually let's just go back to the triple Qs, and we'll overlay a TLT there. This has been going on for quite a while, and there's some big alligator jaws right there. TLT topping out in early April, and it's made new lows, and the triple Qs have, we had that April top and then just kept going higher here. So big divergences here in the market, but short term, market's climbing the wall of worry, as they say, and that's what, for me, it's really all about that debt ceiling deal. When that gets done, how does the market respond afterward? But anyways, transports, still on the weaker side, still inside of this big wedge here, and that's getting really tight, so it's running out of room. Bond land here, so the 2-year, this is a problem. So I'm going to actually pull up the 2-year yield on TradingView, because we need to, with the futures, you can see that contract rollover kind of skews the chart here, but this is a problem. So the 2-year is now at 4.61. That's above this breakdown bar on March 13th, or excuse me, March 13th, sorry. Why this matters is if this starts to head up to that 5% rate, which is right around where the Fed funds rate is, that's going to put a ton of pressure on the Fed. Right now, the market is banking on, the bond market's trying to say that we're going to have rate cuts later this year. If this continues higher, that pokes a major hole in that theory. If you get above 5%, that's going to put a ton of pressure on the Fed to continue hiking more aggressively. So 2-year, definitely moving higher here. You can see the 5 also pushing higher this week. 10-year pushing higher, although it did back off Friday, and then the 30-year as well, right into that 4% area, and that's backing off. But the yields are holding up really well. And again, this is something the market doesn't care about right now, but it will come to pass here if you get yields to really continue to push higher there. So keep an eye on those. Home builders, I think they have put in some type of a short-term top, maybe a long-term top potentially. XHB hitting that double top area. We broke through that 20 MA and now just kind of putting in a sideways pattern here. 1, 2, 3. Inside of the down move, this is setting up potentially for a move to 68 ITB. We'll give that, I would say, about 71.50 if this consolidates sideways a little bit more. VNQ had a minor breakdown this week. Again, we talked about that bear flag. That played out, and it didn't even recover really with the market. This has been weak for a while. Didn't participate in Thursday's rally and barely participated in Friday's rally. So VNQ still on the weaker side. XLF, really nothing doing. Again, still not participating, below all 4 major moving averages, and really kind of a weekly bear wedge if you ask me. KRE shaping up a little bit better. So, regionals holding up. It's not uncommon to have kind of a zigzag up after a big down move. And you have, this isn't a terrible kind of consolidation pattern here for a pop maybe to 44, 45, we'll say. But there's still a lot of resistance in here, right? Anybody who bought this area here thinking it was going to bounce is stuck. So they're going to be sellers if and when we go up and test that. But KRE in a little bit better shape here. Still ugly chart, but just immediate near term, it's shaping up a tiny bit better. XBD broker deals holding up okay. So we got it back above that 50 MA on a close. So that's hanging in there okay. We'll say maybe 455 for now, 460. If you can put in a little bit more consolidation. So broker deals hanging in there okay. I just don't like it on the bigger time frames. All right, over to energy here. So crude hanging in there okay. That's reasonably up here. Again, the futures are open right now. So again, still kind of a choppy, kind of sloppy ascending pattern here. I'm not sure what crude wants to do right now. I don't have a bias on it in either direction here in the near term. There's not really a good pattern here. So I'm leaving it alone right now. If you lose 70, then you got to hold 68. Otherwise, it's down to the lows here. I'd still give it a chance to get to 76, though. So I still think it wants to at least test that area. Then we'll see what it does there. But, crude just hanging in there. XLE on Friday, that was down. So that was down Thursday and Friday. And again, it's the breadth story, right? Again, AI stocks ripping higher, everything else not so much, right? So XLE on the weaker side. I don't love this trend line. I would love to get it around that 70 handle. We'll see if that can happen at some point. XOP a little bit on the weaker side. Again, really all energy was on the softer side towards the latter part of the week. If this does go into corrective mode, it's got a ton of support at 100, and the OIH here also kind of putting in now, I would call it maybe a descending triangle there. So we'll see. I think that has to go down and test this area. But again, energy a little bit on the weaker side towards the end of the week, but nothing really terrible overall. Nat gas really just kind of stuck in a choppy range here. It did roll over. It had the contract roll over like a lot of other things here. Still have not a terrible consolidation pattern here for a potential move higher. So we'll see what that does into next week. All right, see what else we got here. So MOS, so some of the potash names did roll over a little bit. I still like this level a lot on MOS. You got the 618. You just threw a previous all-time high. And then the weekly 200 moving average. So this is a pretty good area here of support. I do like MOS in this area for a bounce. So that's, that pretty good opportunity here, I think, for at least a swing trade. But MOS on the weaker side. NTR did get a little bit through my level. There's still a lot of support at 55, though, so we'll see how that behaves this week. So potash names coming under pressure here, but I think these levels are pretty attractive here. DBC still kind of just in a range, nothing really crazy going on there. I would prefer that to get back above 2350, though. CCJ in the uranium sector here, that's holding up really well, and if this consolidates a little bit more, this is a good weekly pattern. So you're below this red bar high here at 28.2, and you tested it. You couldn't get above, couldn't close above it, but look what you're doing. You're inside. You got an inside bar here. This consolidates more. This can break this wedge. So that is holding up well. The only thing I don't like is the URNM, so the rest of the uranium sector. I just don't like that you're below these trend lines and below those moving averages on the weekly. If you, by some chance, you get back above that, especially if you get above 34.22, then this goes to moon mode, if you ask me. But until then, I think it's setting up for a move to 25. All right, what else we got here? All right, so let's get over to the dollar index here. So we'll go to the trading view. All right, so DXY, that's holding up well. Again, we had kind of a breakout last week, and you know, if this consolidates sideways, it's going to 106. So I like the dollar here, and that's another thing, another divergence. We mentioned the transports, we mentioned TLT versus QQQ. The dollar index is, I mean, that put in a bottom on April 14th, right? And the markets have held up and gone higher, and the dollar is going higher. This is another thing the market's ignoring right now. Again, these things can go on for a while. I don't know how much longer they can, but market does what it wants to. But DXY here holding up okay. If this flags, it's going to 106. I don't hate that pattern. I think it's doing pretty well. Gold here continued to back off. I still think it has a lot of support around 1900. So we had a little bit of a bear flag there on the daily, and then down to the 100 MA that held. The trend line I'm looking at here is going back to that high and right into this area. It's still holding the 20-week moving average though. So until you get a close below that, this is still strong. So gold holding up, and that's despite a strong dollar here too. And I think this is partially holding up because of the debt ceiling uncertainty. So that could certainly be a tailwind there in the short term. And as you can see, silver not doing nearly as well here. So much more of a correction there on silver. As silver is much less of a monetary metal than gold, at least for right now. I still think it wants to go down to that 22 handle, but it should get a bounce here at some point. Platinum backing off as well. That lost the 1040 handle on a weekly close, so a little bit of sign of weakness there. I still think the monthly pattern is fine for a nice, you know, consolidation. If you can go sideways here, this can build a really nice base. And the same thing with palladium. I'm still watching to get in. I'm still looking to get into palladium, honestly. Myself here, I would just like to see maybe a test of double bottom or something of that nature there, but I like the level a lot on palladium, as you know. And then copper here continuing lower, and then we got a bounce towards the end of the week. Probably wants to test 370. Looks like it already did test 370 there, so we'll see how that holds up. I still think this wants to go down to 340 though, so we'll be watching that moving forward. All right, lastly, over to Bitcoin. So Bitcoin, interesting technicals going on here. So this head and shoulder is still intact. So even despite that big pop we got yesterday on Sunday, this neckline here, so there's your white trend line, which coincides with the 50 moving average, by the way, that's still holding. So until you get a close above that, this pattern is still valid. Now, I will say the weekly still looks really good. I actually think this weekly pattern is not a bad look here. You got big power bar, lots of consolidation, and then look what's happening here with the 20 MA. So you're getting a bid off that's holding as support. If you lose the 20 MA, it's probably done. But for right now, I'll give it the upside bias on the weekly time frame. So daily chart's bearish, weekly chart still bullish. Generally, I want to go with the weekly chart because that's a more dominant one, but we'll see which one plays out here. Again, it could go either way at this point. But anyways, back over to the spiders really quickly. So the levels have not changed. Again, 422, gap fill, rising wedge trend line 425. And again, with the NASDAQ, watch that 618. Again, it's all going to come down to how the market reacts after that debt ceiling deal. Does Yellen really pull a ton of liquidity out? I mean, she's going to have to. It's just a matter of how quickly it takes place. And that can add as essentially a like QE on steroids. So we'll continue to watch that moving forward. Anyways, guys, hope you had a great holiday weekend. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. I'll talk to you all next week.